Have you ever wondered how massive container ships carrying millions of dollars worth of goods actually get paid for? For centuries, the answer has been a mountain of paperwork. We're talking about bills of lading, letters of credit, certificates of origin, a complex, slow, and surprisingly fragile system. A single misplaced document or a tiny discrepancy can halt a shipment worth a fortune, creating massive delays and costing businesses dearly. And let's not even get started on the risk of fraud. Forging a piece of paper is far easier than you might think, and it's a multi-billion-dollar problem for the global trade industry. It's a system that feels like it's from a different era, completely out of sync with our hyper-connected digital world. But what if there was a way to bring this archaic process into the 21st century? What if we could make it faster, safer, and more transparent? Well, that's where blockchain comes in, and its potential to transform trade finance is nothing short of revolutionary. Let's break down how this actually works. Forget everything you think you know about blockchain from a cryptocurrency perspective. At its core, blockchain is simply a shared, immutable digital ledger. Think of it as a digital notebook that once a page is written, can never be altered or erased. Everyone involved in a transaction, the buyer, the seller, the banks, the shipping companies, gets a copy of this same notebook. Now let us apply this to a real-world trade scenario. Imagine a coffee exporter in Colombia is selling a large shipment to a cafe chain in Japan. Traditionally, this involves a letter of credit issued by the Japanese buyer's bank to the Colombian seller's bank. This is a promise to pay once certain conditions are met, verified by a whole host of paper documents. This paper trail has to physically move between multiple parties across continents. It's slow and prone to errors or even deliberate tampering. With blockchain, we digitize this entire process. The letter of credit isn't a piece of paper anymore. It's a smart contract on the blockchain. A smart contract is a self-executing agreement with the terms of the deal written directly into code. The conditions for payment, like the goods successfully leaving the port in Colombia and arriving at the port in Japan, are programmed into this contract. Similarly, the bill of lading, which is the title document for the goods, is created as a unique digital asset or token on the blockchain. Instead of couriering a piece of paper around the world, the exporter can instantly transfer this digital bill of lading to the buyer's bank once conditions are met. As the shipment moves, each step is recorded on the blockchain. The container is loaded onto the ship. That's a new entry on the ledger, time-stamped and verified. The ship leaves the port. Another entry, it passes through customs. You guessed it, another verified entry. Everyone with permission can see this progress in real time, but no single party can change the history. This creates a single source of truth that is completely transparent and trustworthy for all participants. Once the smart contract verifies that all conditions have been met, say, the GPS data shows the container has arrived in Japan, it automatically triggers the payment from the buyer's bank to the seller's bank. No manual checks, no paperwork reviews, no delays. It's a seamless, automated flow of information and value. So, what are the real-world benefits of this massive shift? They are staggering, and they touch on two of the biggest pain points in trade finance: speed and security. Let's start with the most dramatic impact: the reduction of fraud. The World Economic Forum estimates that the trade finance gap, the difference between the demand and supply of trade financing, is a massive $1.5 trillion, partly driven by the risks of fraud. Paper documents can be easily forged or duplicated. A criminal could use a fake bill of lading to claim ownership of goods they never paid for, or use the same document to secure financing from multiple banks. a practice known as double financing. With blockchain, this becomes virtually impossible. Each digital document, like a bill of lading, is a unique token on the ledger. It cannot be copied or spent twice. Its entire history, from creation to transfer, is transparently recorded. Any attempt to tamper with it would be immediately obvious to everyone on the network. This level of security gives banks the confidence to finance trades they might have previously considered too risky, helping to close that massive trade finance gap, and empowering more small and medium-sized businesses to participate in global trade. Next, let's talk about speed. Oh, the speed. A typical international trade transaction can take anywhere from a week to several weeks just for the paperwork to be processed and verified. This isn't just an inconvenience. It ties up huge amounts of working capital for both the buyer and the seller. The seller has to wait for weeks to get paid for goods they've already shipped. And the buyer has their capital locked up while waiting for the documents to clear so they can claim their shipment. By digitizing the entire process on a blockchain, we can cut this time down from weeks to mere hours or even minutes. Think about it. The moment the goods are confirmed as delivered, the smart contract executes the payment instantly. This incredible acceleration frees up capital, reduces inventory costs, and makes the entire supply chain more efficient and responsive. For businesses operating on thin margins, this isn't just an improvement. It's a complete game changer, allowing them to reinvest their money faster and grow their operations. Furthermore, this transparency benefits everyone in the chain. Customs officials can access verified documents instantly, speeding up clearance. Shipping companies can optimize their logistics based on real-time data. Insurers have a clear, auditable trail in case of a dispute. The efficiency gains compound at every single step, creating a system that is not only faster and safer but also smarter and more collaborative. So, when we look at the big picture, it's clear that blockchain is poised to do for trade finance what the internet did for communication. It's moving us away from a slow, opaque, and vulnerable paper-based system to one that is digital, transparent, and incredibly secure. This isn't just some futuristic fantasy. Major banks, shipping conglomerates, and tech companies are already investing billions in building and testing these blockchain-based trade platforms. We are at the very beginning of a fundamental rewiring of the arteries of global commerce. The technology that started as the engine for cryptocurrencies is now proving its worth in one of the world's oldest and most essential industries. By creating a single, shared source of truth, blockchain is not just reducing paperwork. It's building trust in a trustless environment, accelerating transaction speeds from weeks to minutes, and unlocking economic opportunities for businesses of all sizes around the globe. The future of trade is not on paper. It's on the chain. Thank you so much for watching. If you found this explanation helpful and are excited about the future of technology and finance, make sure to hit that like button and subscribe to the channel for more deep dives into the innovations shaping our world. Let me know in the comments what other blockchain applications you'd like to see covered. See you in the next video with new topic. Thank you.